We talked about leveraging our strengths very early on in today's session, and that's what we're going to be talking about today. So way of introduction, my name's Lally Rementilla. I'm the lead partner for a new investment and value creation platform focused on the IP ecosystem called IP Investment Partners. We have two panelists today. I'll make a very quick introduction, and then we'll go straight to addressing the questions and then talking about resources. So Karicia Quiroz is an economist with Export Development Canada. She specializes in analyzing macroeconomic and industry trends and assessing their impact on Canadian exports and particular sectors. She delivers forecasts, insights, and commentary on strategic areas such as critical minerals and the automotive industry. With a background in economics and international business, Karicia brings 11 years of experience in trade, foreign direct investment, and advisory services. We also have today Devashish Paul, or Dev, we'll call him Dev today. He is the CEO and co-founder of BluWave-ai. You're based here in Ottawa, right?
Yeah, based here in Ottawa.
Local to here. BluWave-ai is their solutions apply artificial intelligence cloud software to optimize the cost, carbon footprint, and reliability of renewable and non-renewable energy sources in real time. They've got a significant focus in applications in the electric vehicle infrastructure sector. We'll learn more about that today. And a very IP-rich entity holding 11 granted patents and with 43 applications filed worldwide. So good afternoon, and we'll get right talking. Actually, before we do that, so this panel discussion is about grounding ourselves honestly. So let's be honest. Let's talk about what we really are very strong at, what we're vulnerable to, and what we can actually do to build a meaningful foothold in global supply chains and value chains. We're lucky to have two experts here who see the landscape differently. So it's going to be a bit of a yin and a yang, macro and micro views on the critical mineral sector. And I think that's going to be very important today. So let's start with the Canadian view. When you look, and maybe I'll start this question with Karicia, and then Dev could follow. When you look at Canada's role or position in critical minerals and clean energy as of today or right now, what do you see as our biggest genuine strengths?
Mm-hmm. So, welcome everyone. I'm gonna talk a little bit about some numbers. That's why I have my laptop here, some macro numbers, because I don't wanna mess up on the numbers. I think they're very key to just kind of painting the picture as to what is Canada's competitive positioning. So I believe we have a lot of raw material advantages. We have a pipeline of mining projects. According to S&P, we have over 2,800 mining projects from mining discovery to production. But now if you look at what's the share, like what's the number of projects that we're actually producing out of that 2,800 plus projects, we have 133 projects actively producing, and 40 of these projects contain a critical mineral as a primary commodity. So that means that's the main mineral being produced from the mine. Now, if we look at like what's ahead, like what's in our pipeline, what's likely to be produced within the next 3 to 5 years, so within the short to medium term. We have 28 projects that we consider in pre-production according to S&P data. And from that, 17 projects contain critical mineral as a primary commodity. So from the picture of 2,800 plus projects, there's a lot of opportunity in the long term. And there's a lot of data and reports that say that on average in Canada, the lead time for mining discovery to production, 17 years, 18 years. So on average, as a lead time, that's a pretty lengthy lead time. And a lot of different factors that Canadian mining companies, projects, they face. And I would say those are their challenges from limited financing, to permitting times, to, let's say, lower infrastructure or less infrastructure that takes workers to the mine, because a lot of these mines are located in remote regions. And amidst that, there's also the global context. We have China, which has significant dominance in critical minerals value chains, particularly in the processing, the refining, so that value add stage. And as a result, China has effectively a lead on the supply, and potentially could lead to oversupply. They could overflood the market, and that could also lead to a control on the price, the market price. For example, rare earth elements, REEs. China has over 90% of processed REEs. And so it basically has that command of the market price for REEs. And what we've seen recently in the fall is when China had announced it would introduce more rigid, more strict export restrictions on REEs, globally everyone was feeling it, right? Because they sense, oh, this is going to impact everything. Because countries, US, Canada, all of these other countries, were quite reliant on China for processed REEs, given that they have such command of the supply, the process supply. So now you start seeing announcements of bilateral agreements with US and other countries like Australia. You start seeing certain supports being announced by the government in its recent budget to come up with mechanisms to support the domestic mining and processing of critical minerals in order to help reduce reliance on China in the long term, because a project just doesn't happen overnight. It takes years. But there are efforts, government efforts being made to help speed up this aspect. And then, of course, there's other supports and mechanisms offered by the overall ecosystem as well. And we're probably going to hear more of the business side of things from Dev.
Thank you very much, Karicia. So, Dev.
So I'm sure many of you watched the circus in the House of Commons yesterday evening at 6:45 p.m. and watching a budget being passed or not. So I'm sitting back and looking at this thing, and I'm going, okay, so before I go into what I was thinking, I'll just ask the audience, how many of you been to like Palo Alto or San Jose? Okay. How many of you have been to Singapore? Hong Kong? Okay. Luxembourg? All right. So all these random places, Herzliya, Israel. Okay, so all these random places, you can't put a hole into the ground and some mineral will come gushing out that you then put on a train, take it to a ship, and take it somewhere else to get rich with. So these places that I just rattled off, what they have in common is what we have in common, like diagonally across from us on the other side of the canal, there's a critical mineral right there. Anyone want to guess what that is? Like diagonally across where my hand's pointing, and some of you may have graduated from that place. Yeah, it's the University of Ottawa. It's the Canadian universities. Okay, so we're watching this budget, and it's a dig a hole in the ground and ship it via train and pipelines or whatever onto ships to generate wealth for Canada. Dear Mr. Carney, you missed the best critical mineral out there. And the best critical mineral is in the brains of all of you people here and all the kids coming out of the University of Ottawa that Google, Microsoft, Facebook, NVIDIA go to University of Waterloo and recruit for their companies. And then they harness the brain power, encapsulate in products, and create wealth for their economies instead of us doing it for our economy. Now, so as entrepreneurs, what on earth is our job as startup founders? Our job is to create something out of nothing. How do you create something out of nothing? You get a whole bunch of smart people from Waterloo, from UBC, from McGill, from U Ottawa. You put them under one roof with a bunch of computers. And you go, look, somewhere in the future over there, there's a market problem. if this thing goes that way, and this thing goes that way, and this thing goes that way, and that thing goes that way, there's an intersection point somewhere in the future where all of these market, technology, human, political, and social trends intersect to create a market opportunity. And if we build the patents, the algorithms, the companies, the teams to intersect that point in the future before the multinationals hop in the game, then we can actually create something interesting. We can create value with that. So way back in the day, there was a company that had a flip phone called Nokia, a company who had a digital camera called Kodak, a company who had this category called a personal digital assistant. If you recall, it was a company named Palm. There was a shitty pager. Netscape Navigator had just emerged, and AOL Time Warner could give you, no, it wasn't part of Time Warner back there, it was just AOL. They could give you email, and they were all disparate services. And a bunch of smart guys in Waterloo got together and go, hey, geez, like if we actually integrate some of this into our pager, and we can actually send emails on our pager, how cool would that be? Oh, let's add a digital camera to it. Let's add the web to this. Before you knew it, they created a smartphone category. Okay, so they started creating something out of nothing. What we're doing is looking at the wrong critical mineral. The biggest critical mineral that we have is where the greatest value creation is. It's like building on top with finesse, with intelligence, on top of like fundamentally raw items. There's a reason why Google's market cap is something like 25x of Intel's, right? But all of Google's data center needs Intel processors. So from the entrepreneur angle, like what we see is there's a brute force way to become an energy superpower, build nuclear power plants, burn more natural gas, and keep repeating that cycle. Or there's an intelligent way of deploying more wind, solar, and battery technology and use intelligence overlaid on top of that to actually manage that and create basically wealth out of nothing, because you're pulling energy out of the sky, which is what China is doing, and surpassing all of us. They're reducing their oil dependency. They're pulling energy out of the sky with wind and solar and batteries, putting it into their electrified transport. They have 50% of the world market of EVs. And they're just as we're sitting here looking at digging holes in the ground, they're leaving the world behind. So we think there's an opportunity to become part of that economy moving forward, and we need to capture the IP and the patents around that. Okay.
So when you talk about that opportunity, like what does
and
that?
You can tell I'm kind of irritated about the digging in the hole in the ground economy that we're building, but let's go on.
Yeah, I mean, like, you know, obviously it is also part of our strength, right? It is what brought us to the prosperity that we are seeing right now. But I think the opportunity is then how do we like combine and integrate the entrepreneurial mindset with the resources that we have and the infrastructure that we have in place, so that we can create something of value that can leapfrog, you know, potentially our competitors. Any thoughts on what are you seeing as those best practices that we believe that if we put in a lot more focus and energy on can actually make us a leader in sort of that next wave of whether it be refining, processing, selling, distributing of all these sort of products and technologies that come out of the critical mineral space?
Oh, this.
And either one.
Go ahead.
Well, from the macro perspective, and I'll let you answer from the business side of things, like, I was interested earlier this year to see U.S. developments with MP Materials, rare earths company, and it's the supports it had introduced, which was pretty novel for a Western country. It's a Western country, Because at the time when they had announced they would do some supports, they would take an equity stake in MP Materials, which hadn't been done by US government in a rare earths company before, in a mining company before, to this extent. They committed to a price floor into setting double the market price at the time for the specific rare earth, the processed rare earths coming out of MP Materials' upcoming project, which then would also, if there was a higher price than that price floor, they would then share in the upside. And also, the US government had committed to offtake agreements, which is a future, it's a commitment to purchasing future output. So these mechanisms I thought were novel, and I thought, will we see more of these? And we're starting to see more of these, and we're starting to see in the language of the agreements that the US is putting in place with other countries, like Australia, and setting up an international pricing framework in order to, in a way, like push back against China's dominance of these materials and the prices, essentially, right? The low price that we're seeing from China, like in rare earths, it's quite low prices because China commands the process supply, because they can overflood the market and bring that down, make it less competitive for others to enter the market. So the US and other countries now, other allies, are trying to, or are committing to change the game in this regard. Maybe create some Western pricing or international pricing frameworks where they can trade within a block of countries. I mean, this is all early stage because this is the language I'm starting to see in these bilateral agreements. So we'll see how that actually plays out in the short term. But it's interesting to see that. And then I thought to myself, what's going to be Canada's response? Because US is still our biggest trading partner, not only overall trade, obviously, but in critical minerals as well. Are we going to introduce similar mechanisms? What is the outlook for that? And just seeing even in the federal budget with the Sovereign Critical Minerals Fund that was announced in the budget, it did mention that there will be funds allocated, provided to NRCan, to then determine like how to use it for certain mechanisms, but offtake agreements were mentioned, and a few others. So I thought, okay, we're starting to see maybe some innovations in terms of supports of these type of supports. Now, I'll let you talk to the business side.
So my company doesn't do anything related, at this point at least, to mining.
But what's the plan? What's the plan?
There's no plan to be in mining. However, as an entrepreneur, if I was to get involved with that, so our VP of Engineering and Technology, Thomas, is back there. He's the key instigator behind our 51 international patent filings, and 12 are now granted. So we just surpassed 50. So if Thomas and I were to sit in the room and go, okay, let's open a subsidiary that is involved in critical minerals. I think the first thing that we would do is go, all right, where is the value created in this market? And the value isn't in the raw extraction, right? Like it's very clear that China has locked up a whole whack of process-related patents and IP. So even if you can get the critical minerals out of the ground, you're probably going to have to license something from them just to process. Your extraction and processing steps are going to be limited by them. So the first thing we would do in my company is we would start going like, okay, let's engage with an IP law firm, and here are some ideas we have. So we'd file a provisional patent like right out of the gate on areas where we think that there is value-added systems and methods and processes, right? Not the actual algorithm, but how these blocks fit together to create that additional layer of value. And then what we would do is we'd go to the IP law firm and go, okay, we didn't do any Google searches, we didn't look at anything out there. Now you guys, here's our draft. You guys go look at this, and you look at the prior art out there and navigate around the prior art, and let's redraft this thing based on your input. So we're ignorant of the prior art out there, but you're giving us guidance on going around that. And then coming up with, you know, several systems and methods, patents that then we can instantiate in our manufacturing or products or our whole supply chain. I think on the patent earlier, the guys were talking about everything that TSMC has locked up in the semiconductor fabrication side. So I think that would be like from the entrepreneur side, I think that's how we would approach it, because otherwise you have no freedom to operate, and you're inherently going to have difficulty selling or minimally bringing products to market or raising financing, because you're going to go to some VCs and they're going to go, well, look at all this list of prior art that these Chinese companies have. We're not funding you guys because there's no opportunity for you guys to sell in the market because they got it locked up. So I think that's what we do from a entrepreneurship side to get into something.
Yeah, I mean, highly agree that there's a lot of value in the processes after extraction. What do you think's holding back the ability of Canadian companies to do this, to file for that innovation, or to even experiment and do further R&D to come up with a lot more of that technology that we can own?
Well, from our side, I think we're in a parallel part of that energy industry with electricity grids and electrified transport and all of that. I think the biggest challenge we see from an entrepreneurship side is not the talent coming from diagonally across from where we're sitting, or from UBC or whatever. That's all strong. I think there's two things that we see from the entrepreneurship side. In Canada, different levels of Canadian government buyers, and even large Canadian corporations, they won't take a bet on Canadian tech out of the gate. So we have to go, and sell in Japan, and sell in India, and sell in Dubai, and in Scotland, and in Georgia, and then come back and go, oh, look, our tech works way over there, like 12 time zones away. Can I go across the Queensway and get you guys to use this? Oh, but we'd rather buy it from a multinational. So there's that. And then the other part, the other challenging part, is the scale of our capital markets, and our risk-taking in our capital markets is relatively a lot different. I'll just say a lot different, because I'll just get irate if I have to use the real adjectives about our capital markets. It's just a lot different than the risk appetite in US-based investors. And because the risk appetite is different, we don't reward, in a sense, as an economy, we don't reward risk-taking the same way as they do in other economies, And I think we chose to be part of Great Britain as a founding principle of why Canada exists, and the U.S. were like, you guys get out of here, we don't want you, we're good on our own. We don't need to be hanging off the edge of your empire. We're going to do our own thing. And that fundamental risk-taking that's embedded in the U.S. mindset works against us.
Okay, thanks very much, Dev. Karicia, I was wondering on your thoughts on what you've seen all around the world. Have you seen any sort of you've already talked about changing the game on offtake and pricing. Have you seen any other innovations that are coming up in maybe other emerging countries that would help us understand what are the opportunities for further value-added products and services that we could create or innovate or invent?
Well, perhaps I can't answer to the business level, but I'm thinking when I think of innovation, and I mean, my other portfolio is automotive sector, and I'm sure you can speak to it at length as well, but recently we did an analysis on China's command of the EV sector, EV industry, and how many decades they've spent focused on EVs as a strategy, and the different types of policy supports and subsidies, different schemes that were provided to enable adoption within China and to also enable mass production and thus exports around the world at very affordable prices. They started with lithium iron phosphate, LFP batteries. Well, that was one innovation. BYD had basically changed their game, right, by adopting that, having lower cost EVs as a result. I mean, there are multiple other factors, but this is one of the factors I noted. That battery chemistry type made it much cheaper, because sometimes an EV battery can be up to 40% of the cost of an EV. And by changing the game in that one innovation, they're able to take that such a lead in EV production and exports globally. So noticing in battery chemistries, and that ties into the critical minerals aspect, right? Because you think of nickel, cobalt, and lithium, the prices, the dynamics, it's still, even though prices have gone down since their peak in 2022, it's still relatively more expensive to put together a nickel-based EV battery versus, let's say, an iron-based battery, like lithium iron phosphate, LFP batteries, because now you're excluding the nickel and the cobalt, and it's a cheaper battery, cheaper EV, more affordable price tag. And consumers, like in Western markets, Europe, US, Canada, we're facing this, okay, what is the EV price tag that we have within our regions, and with these tariffs imposed, right, it kind of stops the flow of these cheaper priced EV models from China. So all of this, I'm thinking, okay, that's one innovation, and I can already talk endlessly about just how this has really changed the game in that regard. But in terms of other innovations, I have to say, I mean, China's far ahead of the game. I'd say Europe is a bit more, I would say, more innovative than let's say, the North American market, but I think you can maybe speak to some of those aspects.
So thanks for, bringing the whole EV angle into it. So, roughly speaking, like every electrified vehicle unit on the street puts in the range of $3,000 into the local economy for a non-oil producing region, such as China, in the difference between the cost of electricity and the cost of oil. So you spend less on oil that you import and more on electricity that you generate. And in the case of China, onboarding 1 gigawatt of solar per day, that's like free energy out of the sky, energizing their transportation network. So at our company, at BluWave-ai, we were like, okay, if that's where the world is eventually going, we see these batteries that BYD, so initially Elon Musk packed them, laptop batteries into a car drivetrain, and he made a sports car. And it's like, okay, yeah, but when those batteries are hanging off of the grid, they actually become storage for the grid. So what if we create a system that overlays on top, and it predicts how much solar and wind energy is fluctuating all over the place? It predicts how much charging is going on between my car and your car and someone else's car. And it manages the charging to line up perfectly with when there's more wind and solar on the grid and when there's less energy load on the grid. If we could create a system that does all of that, and we can connect up with basically every EV on the planet, and we connect up on the other side with every grid on the planet, then we can enable a transition to decouple the dependence on fossil-based fuel and use that fluctuating renewable as the energizing source for transportation networks. So, built right here in Canada, that's what we're doing. We have a product called EV Everywhere. There's several underpinning patents to it. And we said, okay, well, we're not going to build the batteries like other people have done that. BYD did that a long time ago for cell phone batteries, and they packed them into cars and they wrapped something around the cars. But who's actually putting the software layer that manages all of these systems together? Well, why don't we do it? So that's what we thought is an opportunity for the Canadian economy. We just happen to be a bunch of, software and innovation guys putting it together under one roof. But what we identified was, from our universities, we have all the key technical expertise to build that capability in Canada. So we said, okay, from an innovation angle, we can do that from here. China's going to build, China and others will build the EVs, right? Others will build like wind turbines and gas power plants and, everyone building literally turbofan engines can sell them for AI data centers right now to power the data centers with polluting gas. But that's another problem. But we're not going to be involved in that, but that's what we can do from a Canadian innovation angle and play in it.
Right. Okay. But that's again like changing the game. It's almost like you're building that sort of layer up to bypass that sort of EV value chain or supply chain. But then you're also creating that angle or that layer that makes it all more efficient and commands a lot of rents on your part, right?
Well, the challenge is once you get to a critical mass, it starts becoming of EVs. It has the potential to become problematic at the distribution grid level, where you can't get enough power down the street to all those vehicles charging, or it could be at the system level, the Ontario system-wide level. We just don't have enough capacity. I have this theory that Quebec killed their incentive for EVs because they're like, wait, if we get more EVs here, then all our local drivers will take this cheap power when we could sell it way down there to New York City and Boston for way more money. So we need less EVs on our grid here in Quebec for now. So until we get our capacity back up, we don't want EVs getting in the way of revenue from New York City. That's my theory. I don't know, maybe I'm just envisioning something that doesn't exist. But I think if I was a politician in Quebec, that's what I would do right now. I'd be like, no, we're getting too many EVs. We got to make revenue off New York City. These guys want electrified transport for cheap. Downstream from now, when we can build up more generation, absolutely, we want them all on Hydro-Quebec. But right now, we need revenue from over there.
Yeah. Okay, so we've got one last question before we go to Q&A. Fast forward 365 days from now. Each of you are given a blank sheet of paper where we say, Dev, this is your budget, or national budget, that you can write. So what is the one thing that you think is the most important thing that we can put our resources, our time and energy into? And the same question for you, Karicia.
The most, from an
one high impact move that we can be funding or investing in a year from now.
Well, clearly I didn't see anything in the budget for the type of platform I was talking about, so I'm kind of biased. You know what? I don't have a good answer for that, other than, I didn't see a lot for energy transition, so I'm kind of on the side of Elizabeth May and the NDP, as much as many people here may not be on that side. The world will just light itself on fire unless we do something about it, and Canada over-contributes to lighting its world on fire, this world on fire, in the vein of making ourselves wealthy, and I totally get that. But I think there's a way for us to make ourselves wealthy with energy transition technology and electrified transport. So I'd like to see a sliver in the next round of what the government's doing more actively in that area.
And Karicia?
In terms of policy or supports, unfortunately, I can't make a formal comment as the Government of Canada is our sole shareholder of EDC. But what I can say in terms of 1 year ahead, we'll be in 2026. We're expecting the midterms, the U.S. midterms to shift things in terms of trade policy. So based on our economics team's view, we do expect improved trade policy certainty next year. And what we also do expect is that renegotiation of CUSMA. And given the flow of critical minerals trade between Canada and the US, US is our biggest export market for critical minerals exports. And given the US's accelerated focus on securing bilateral agreements that are really putting in a lot of investment dollars in terms, at least in what they're announcing of, we're going to invest this much in supporting our country and Australia's, as I keep going to that example because it was so recent. So given all this, there are, in my view, potential opportunities that will open up for Canada in the short term. We do have a lot of raw materials, yes, limited processing capacity, but in the next 3 to 5 years, now we're talking medium, long term, there will be more processing facilities based on what's in the pipeline and critical minerals. So now, longer term, we will have, I think, a more positive outlook. Right now it's a bit shaky, short term, near term, but next year things will start to calm down in that regard.
Thank you very
Just
much.
my views.
So we'll open it now for the audience if there are any questions for the panelists. Yes.
Thank you. Since we're talking about clean tech and mining and critical minerals, could you, from an EDC perspective, could you maybe speak to some of the prospectus from an IP perspective for Canadian investors and collaboration and R&D opportunities, especially because it's Canadian firms that are very active in Latin America, Central America, with Australia. But also there's a new market opening up with Ukraine as we think about the future and moving into peace, because they also have a large number of critical minerals, rare earth minerals. Thanks.
And I'm sorry, I missed part of the beginning of what you said. You said from a something perspective, and then
From your agencies, from your researchers, yeah.
But okay, so we're looking at, I mean, okay, so our strategy is to improve trade diversification, but we're also cognizant that the U.S. is still our biggest trade market. Now, with that as the background context, we are working actively with Canadian exporters, Canadian businesses in looking at opportunities beyond the U.S. and if they're looking to increase their portfolio. And in the mining sector in particular, we have a lot of Canadian mining assets in Latin America, as you mentioned. We also have an improved focus on areas such as defense and security. That's a priority focus area in the EU. There are critical mineral opportunities in this sector. Actually, we wrote an analysis on critical minerals opportunity between Canada and the EU, and particularly in defense. So it's on our chief economist Trade Matters commentary, is published in the summer. But anyway, I'm just promoting that. But we did an examination of those opportunities as well. So yes, you're right. It's beyond just our U.S. partners, yes, but and of course we already have. There's always Canadian mining suppliers. There's always our supply chain are vast worldwide, but we also start to see a lot more of this domestic focus, I'd say, in recent, given the trade policy uncertainty, given the China context, in producing more and refining more from Canada for export. But you're right, it's multifaceted. We have those CDIAs or mining assets abroad that we'll continue to support, because EDC's mandate is to support Canadian companies in growing their business, in growing the international operations, with the goal of bringing positive benefits to Canada. So hopefully I was able to touch upon some of the questions you had.
Any other questions? Yes.
Karicia, you studied different models, it seems like, internationally with China you're citing. Have you looked into the Irish model specifically? Because there's a reason why Meta, Apple, Salesforce, they've all housed their patents in Ireland. You know, the IP box strategy, the tax credits, the combination of, the lower tax. Have you looked into that model? Because that has seemed to have attracted a lot of big companies to house their patents within Irish boundaries. At the same time, the revenues from they generate are, off the charts. So I'm curious to know if that has kind of crossed your table, or you've had some opportunity to kind of review that and had any views on that.
The Irish model, no, but I will take that. I will take that comment and look more into it. I think that's more potentially a question related to the patents.
Yes, I mean specifically with their IP box strategy,
Yeah.
the the knowledge mobilization box strategy that they have as a country.
I mean, if you look at some of the patent box regimes, there's definitely been a lot of, I guess, benefits when it comes to attracting investment, attracting talent, and attracting companies into those jurisdictions. I'm not an expert, but what I have heard is that the benefit comes when there's cash flow associated, because it's when you have a lot of cash flowing companies that you can actually see the tax benefits accruing, and therefore you need more scale, right? And so while I think that it's like the concept is really good, the question is when you execute it, like, are you executing the right time? Do you have the right tax incentives? And are you attracting the right companies to take advantage of those incentives so that they can create the desired effect of actually creating a more robust ecosystem in that jurisdiction? And then now that you've got all that IP in that jurisdiction, then what are you going to do about it? How are you going to create from it and create more companies and create more innovation? Or is it simply just a way of warehousing patents in order to get favorable tax treatments?
That's a great point, and that is the point of debate, right? Because, I mean, what they have tried to do is not just house the patent within their boundaries, but also invited companies who are commercializing those to the highest extent, right? So if Facebook or Meta is housing their patents in Ireland, they're the one commercializing through their advertising or their products suite as well, and they're recording those revenues and paying tax dollars to the Irish government at a lower tax rate than what other countries might have, and that's the reason why they're doing that. But it still generates a lot more tax revenue for Ireland, which wouldn't have existed otherwise.
Right.
So, I mean, it's a topic of debate, right? And that's why, like, I was curious to know if you, as an economist, if you've done some analysis on that, because it would be good to see some of the benefits or merits of that versus, the cost of doing that for a country like Canada, which is much bigger in terms of land and population and resources than Ireland. It's a different economy. I was just curious to know if that's something that's crossed, your tables on your analysis. So, yeah. But thank you so much for sharing the
Thanks
insights.
for your question. Yeah. I think we're out of time. Well, thank you very much. Thank you, Karicia. Thank you, Dev. Thanks to the audience. And we'll give it to the next speaker.